All right. Good morning, everybody. Liberation Day or whatever. The time is set for Liberation Day at the end of the day, kind of in that quiet period where the only market that's really going to be open is the Australia, I believe, right? If you think about markets and how they open around the world, it starts with Australia and then moves across, right? And I believe they open right around our 4 o'clock. You can always check that with the website tradinghours.com. It's my go-to website when I'm trying to see if there's any reason a particular market isn't open or may not be open in a certain period of time, right? Like I live in the US, and as most Americans, I've got my head in the sand and I don't really pay attention to other countries' national holidays and bank holidays, right? I am not unique, right? It's generally what we do. So when it comes to knowing when another country is going on holiday and won't be trading, I have no clue. And that's why this website is so handy and it's free. You got to love free. It's called tradinghours.com. It will tell you every nation trading schedule, and you can look at it on the time frame or in the time zone of that nation, which helps a lot. And if they have any holidays, it'll tell you that too. So when it comes to Australia, which is what led us here, the conversation of what opens first, that would be what I suspect is that Australia is first. But they timed this announcement in a quiet period where the markets really can't react to it as the data is coming out because there really won't be any market open. Now, of course, there's after hours or, there will be some markets that have the after hours and are open, tradable. But for the masses, it won't be. And that's kind of the idea behind why they targeted what they did. It is interesting that they're able to keep their cards close to the vest, so to speak. We've heard, some whispers of what the tariffs may be, but they haven't done any back channeling with different countries to give them some sort of idea of what to expect to maybe kind of lessen the blow or anything like that. And well, that could just get really fun really fast. I still believe, as my base case argument, that the markets do not like uncertainty. And no matter how bad the data is, just having answers on what the heck the data is going to be helpful. We've had bad news throughout history. It's not the first time we've ever had bad news hit the market. Markets don't like surprise. So if that bad news just pops up on a Tuesday morning, markets will freak the heck out. But if we can telegraph it and see it coming from a mile away and we finally get that bad news, markets don't really have that big of a freak out because they had plenty of time to hedge, to protect their portfolios, to develop a game plan for what if, to speculate and, talk to the nerds and come up with a plan. So could we sell off more? Yeah. Yeah, absolutely. We could sell off more. Price can do whatever the heck it wants. And as soon as you keep that, forefront into everything you think about, yes, we can sell off. Are we going to sell off? How much further, right? Everything that the market does when it comes to the S&P and the NASDAQ is just looking at discount versus forward earnings. I know that's very simplistic. You can throw tomatoes later, but at the end of the day, it's just a calculation between GDP, forward earnings estimates, and where they think the market is expected to be priced, right? So where's that price come in at? And that's what we aim for. Whether that's going to be in the 4,000s, in the 3,000s, I don't see that the tariffs would put us in the 3,000s. Really don't even see it holding us in the 4,000s, but maybe we could drop down there just to say hello. before we come back out again. Markets around the world are in the red. See Hong Kong at 0.25%, and Europe close to 1% to the downside. NASDAQ 0.75%. The small caps Russell 0.75% to the downside. S&P and the Dow closer to 0.5%, although they're stretching beyond it. Gonna get some job numbers today. These aren't the numbers, right? There's always that big job numbers print that we always freak out about, but any numbers on the jobs are worth paying attention to, right? It goes to the heart of the Fed. The Fed has this dual mandate between full employment and low rates. So keep your eye on the job numbers. Okay? They already slayed the inflation beast, according to them. They handled that problem. So the only problem that they think they have left is the unemployment problem. Powell is supposed to be speaking Friday, and we'll see if he still thinks they've slain the inflation beast or not. I think that might come back and rear its ugly head. Japan's got the 10-year bond auction tonight. That's worth thinking about into tomorrow. But, you know, with everything going on near the close or at the close, this just might slip under people's radar right up until midnight when it smacks them on the side of the head. We'll see if that really causes any shenanigans or not. I don't have a lot of information on the Powell speech for Friday, but if it's going to be something impactful, I started telling people yesterday to, well, more reminding people, it's not the first time we've had that conversation. If Powell wants to leak something, because the whole idea is telegraphing and communicating. Markets don't like surprises. So if he's going to change something, he'll leak it and he'll telegraph it in advance. Say what would he want to change? This pause that we're in where they won't cut, and of course they have no reason to raise rates, but they're not cutting. If he wanted to signal or telegraph that they're going to start cutting, then he would want to leak that, and it's very likely that he would leak it through the Fed whisperer, that Nick Tamaros guy. So keep your eye on him. I shared his Twitter handle in the chat. Should be able to find him pretty easy. When Powell has leaked things before, he leaked it through that guy. It's not to say that he has to do that every time, but that's his preferred route, is to get the information out before he makes changes to something, just to help avoid the shock and awe. Yesterday, we had a really nice synchronized move between the 10-year and the ES, and then we got disconnected. So now the ES is holding this range, much like the dollar is holding that range, and the 10-year continues to fall to the downside. It does go to the idea that moving in sync with the 10-year was only going to work as long as the 10-year, didn't start getting out of control. And it started getting out of control when it got below 4.2. Someone much smarter than me has suggested that 3.9 is a critical line in the sand that we don't want crossed. I can't argue with that at all. But how fast we get to 3.9 may be as important as the number itself. The interesting thing, though, is that we're not going to start looking at bonds in correlation with the S&P at this point. No. We just have this disconnect, and there's nothing we can do about it right now. It was an odd connect anyways, because we shouldn't be moving in step with the yields. It's just what we were doing. Option situation is the same as yesterday. Volatility trigger 0 gamma in the call wall over our head, put wall down below. We've got a voodoo line we'd have to cross through to get there. we are inside yesterday's range, and we're not looking like we're going to get to either side anytime soon. It would take a considerable amount of work to reach the edge of yesterday's range. We bounced off the 10-period moving average yesterday. So we ran up, tagged it from below, and reflected off of it, and we're headed back down closer to the lower ADR than we are the upper ADR. And they're not hedging this morning. We may see them starting to come in and hedge later in the day. That would make sense because we're a lot closer to the event later in the day. No reason to hedge it this early, but they are not hedging yet. Just like yesterday, where we talked about being closer to the lower edge, it's more likely that we hit this lower one because we're closer to it, and because this lower one is inside of yesterday's range. If we think about hitting the upper ADR up here, we would have to get an inside day breakout first, get through all of that resistance, and then run up and hit that line. I'm not saying we can't do that, but it's more likely that we hit this one because there's less resistance to get there. It is worth noting that we didn't hit the ADR yesterday, right? We got close, but we didn't hit it. One of the things that tells you when we get close to an ADR or that we just don't hit either side is that we didn't meet our daily expected range. Remember, this entire thing is looking at what the average movement is for whatever stock or index or ETF you happen to be looking at. Markets generally don't just move in a straight line, right? So if our day-to-day movement is that wave up or that wave down, if that's the general movement, it's just measuring what that up and down distance is on average. That up and down distance on average. That's all it's doing. So we get a feel for what normal looks like. We can see it in that label. We didn't even make a normal move yesterday. That's the takeaway is, and it's what we expected. Why? Well, because today's tariffs day, and nobody wants to make really important decisions with a boatload of money right in front of a really big, unprecedented economic event. It makes perfect sense, right? They're going to sit on their hands. They're going to wait out and let the 0-day options flows push things around. We're expecting those tariff announcements at the end of the day. Headlines could move us around between now and then, but the base case argument is that we will stay inside the red lines again today, barring some radical news, up into the event. So, can we hit this lower one? Sure. But if we do what we did yesterday, we won't. We'll get near it, and then we'll start moving in the other direction. We challenged the weekly floor pivot yesterday. We weren't able to keep it, but we did get there. It's a good start. Boatload of money, baby, a boatload of money. When I was measuring how far from the weekly expected move we could get before we started to trigger least squared methods, mean reversions, dot plot statistics, all that sort of stuff, it was 4.5 to 6.5% below the weekly expected, or the weekly floor pivot. If we do get negative this week and we head to the downside, that is the base case range. So if you wanted to trade some out of the money lottos on projected nastiness to the downside, just measure your distance from the weekly pivot. You can start with something like a 4.5%. That would be 5,400, actually like 5432 cog line. And if you wanted to go with a 6.5%, then you're looking at 5311 cog line. Not bad, right? At the end of the week. Short-term shenanigans. Distance is one thing, right? Rate of change is another. rate of change is one of the oldest metrics in the marketplace. Been around forever. It's like one of the first indicators that was ever developed is rate of change. How fast we make that move is almost as important as how far the move is. Almost. We're back to the point of control. It lines up with that volume shelf from last week. We're just building out on it further. A move to the upside gets us through 5,700, which is a critical round number. Then we have the point of control from 2 weeks ago and its price shelf. If we can get through that, then 5,750. So big round number 5,700, that stands in our way to that upside move. If we break this point of control, it starts to get shallow, and below 5611 cog line, then we could just drop right out of the profile itself. We can see that they're putting in a lot of work down here. So we could see them, come in and defend 5580 area. I wouldn't look for a lot of help there. It's possible. $10-day, 30-minute volume profile and TPO. We're continuing to wipe out the candles, but we don't have a classic shape here at all, just a bunch of distribution zones. Got this entire zone and this one and the point of control and this one up here. Now we're wiping this out. So for every new candle we get on this side, we're losing one on that side, and that's going to slowly wipe this out. And it's likely going to wipe all three of these distributions out. So when it does that, it'll move the point of control up here. It is possible that it could move it down here. Because after we lose this, we're going to start losing this. So even if it does get moved up here, the next spot we would see it is down there. And it very likely wouldn't stay up there for very long if it gets up there at all. So it would be better for us if it just comes down into this 5632 area and if we were already above it. We'd have to get it first, right? And that lines up with like Friday afternoon sort of price action. It was them trying to come in at the last minute and really try to hold us back from that sell-off that we had from Thursday into Friday, trying to make it slow down and stop before it got a lot worse. So they built up some volume there. And we have a chance to continue to build out volume here, which could exceed what we have up here, meaning we never get that point of control up there at all. That'd be nice if we can get that. The reason all of this matters is if we can close above that level, or at least be above it by the time the point of control gets down there, it's not over our head as any form of resistance that we've got to work through. It's under our feet. Supportive. I'd rather have it helping me than fighting me. No new VPOC from yesterday. We cut through that level after we opened last night. Nothing really stands out on today's profile other than they match really well. The TPO today and the volume profile pretty much in sync. And we expanded more than I would have thought, given the idea that we were waiting. And the expansion came during the kill zone and then a little after that. That big candle right there. It doesn't look so big now that I've zoomed in on it, but that 6 o'clock candle, it's very likely that we visit that again. It's a little mini liquidity gap. worth keeping your eye on. Only for today. All right, we're still below the 10-week. The curve is coming back up, but we're not within the gravity of it, and we're still below it. So from this location, we're not oversold. We haven't moved down too far, too fast. It doesn't owe us any sort of mean reversion. None of that fits. On the daily, we already discussed the fact that we hit that 10. We hit it yesterday at the close or after the close in the Globex, and then we fell away from it. So we're moving farther away. Of course, on this time frame, this indicator doesn't show us hitting it or getting above it, but we know we did. We're moving away from it. We're outside of that gravity zone that we've talked about before. So it didn't hold us near it or around it at all. We just tagged it and dropped away from it again. As much as it's hard to see it as a wave, this really is a representation of a wave. So if you think about peaks and troughs, then we've already started our way back down again. It is very likely going to be a very slow, very boring day. Very likely. So that's what I would prepare for. Yesterday, when we started out pretty slow and boring, copper was a good play. There was some really good moves in gold. You can always take a look at crude too. Those three are good to play, and volatility is usually pretty decent in Bitcoin futures too. There's like 3 different sizes of Bitcoin. Somebody told me yesterday that I must be crazy or, just completely mad in the head if I'm trading Bitcoin futures, but there's a Bitcoin future that's so small, it's risking 5 pennies. And that's not like in options when I say we're risking 5 pennies, it really means $5. This means literally you're risking 5 pennies. So, I mean, come on. It's a pretty small amount of risk, all things considered, right? So yeah, Bitcoin can move violently, wildly crazy, violent moves. It's 5 pennies. So there's always something to trade is the point. If we are sideways today and we don't get decent moves and we can't get out of our own range, look at something else. Copper's been a really good play. Nice charts, really clean price action. And then there's gold, oil, Bitcoin. It doesn't have to be this, dichotomy between the NASDAQ and the ES all the time. There's certainly other things that we can do. And then, of course, there's equities. In the current situation, we would expect 80% of the market to do what the S&P and the NASDAQ are going to do. So if we're sideways in the S&P and the NASDAQ, corn and lean hogs, man, that is so thin. It's as thin as smoke and mirrors. It's that is really thin. Although you are right. There's always something to trade. I live in Kansas, farmer country. So, corn and hogs, that just sounds like a trip to the local VFW. Looking at what's down this morning, the Mag 7 group, consumer discretionary names, semiconductors, growth, basically. And we need growth on a day like this if we're going to break out and run. We need those risk-on sectors, and we just don't have it. Bitcoin down some, not enough. So if this continues to fade, that'll reach it. But we're already down 4% over a 5-day period in Bitcoin. If we're going to flip and rip, that's what has to change. We got to get the Mag 7, the semiconductors, the consumer discretionary. We need those to stop falling, one, and then two, start rising. And at this point, we have no reason to believe they would in front of the tariffs. Looking at what's up this morning, the VIX, it's up 23.5 points over a 5-day period. It's up 6% this morning, and that's it. Oh, and the down volume of the Mag 7 group. I know that just confuses people when I say that. There's an up volume and a down volume product. This little microsectors FANG product. There's a FNG, which is the FANGs, D, down volume, or U, up volume. So the down volume is up. It's elevated. There's a lot of down volume this morning. 10% over the last 5 days, 3% today. We don't trade that, right? We just use that as a mechanism or a tool to gauge what's happening in the Mag 7 group. They say price is the best indicator you could look at, right? So looking at a lot of prices on different products, it's a really good outcome. I say the clock is the best indicator. Price, probably neck and neck with it. Got a price. So this boring, sleepy, hurry up and wait, nothing day could get a trigger and run. I know that's not what we're expecting. It absolutely can happen, right? It can happen just because nobody expects it. We've seen it happen before on those really big days, like a big FOMC event, or that one year when NVIDIA had the most anticipated earnings in the history of the world, and everybody was sitting around for 3 days waiting on NVIDIA. So we can break out and move today. It absolutely can happen, especially because of the low volume. That may be a little complicated for newer traders, but low volume is when we can make really big moves, because it doesn't take much in a low volume environment to make price move. Maybe that's a little counterintuitive, but that's the way it works. So while the base case argument today is that we're going to go sideways and we're waiting on data and we're likely not going to break out and run, if we do break out and the signals are there, don't fight the price action. Just go with the flow, right? We had the perfect rejection of yesterday's 111 yesterday, and that one trade alone covered my entire trading week. I don't have to even bother trading for the rest of the week. And it was a reversal back inside the range. It's very likely if we test the range today that it'll do the same thing. It's going to reject and it's going to come back in. But if it doesn't and it continues to go, don't continue trying to fight it. We got nothing, guys. There's just nothing out there. Just a market waiting on data. Crude is up to the year-to-date anchored VWAP. That's interesting. Could get something out of that if we do reject there and come back in. I seen you mention that earlier in the chat. I didn't know there was even a symbol WTF. When I first saw that, I thought maybe you were joking and that you were just making it up, but it really is a symbol. They must just be laughing about it nonstop that they have a market symbol, WTF. Maybe they'll have my favorite symbol, GTFO. Nope. So WTF is up, but there's nothing there, right? If you look back, you can't look back, right? Like there's nothing. No thing. So guys, today, watch the clock. Keep your eye on the headlines. Look for any signal that we're going to get some juice and go. It could be based on market breadth, could be based on options that start coming in, could be treasuries or commodities. We don't know until we get it, right? So you want to just cycle through those tools every once in a while and keep your eye on the clock and look for the opportunity to get that breakout. The breakout being yesterday's high or yesterday's low, which at this point, they're both quite a ways off. Yeah. So what I got for you guys, be careful, be safe. I'll see y'all tomorrow.